Yo, we are dropping Coronavirus episode 4.
Episode 4. I can't believe it's on 4 already.
Volume 4.
There's a lot to talk about.
Oh, man. We've been throwing out these mixes. So this is, we were the Coronavirus S.O.S. 1 will go down as a classic.
Yeah. Investing nugget of wisdom.
Oh, geez. So out of that SOS 1, there was a 26 bagger.
Man, that's crazy.
Norwegian Cruise Line put. So,
and they're still working. It hasn't stopped working. The airlines, the cruise ships, and oil, right?
And oil. And we were saying, listen, this is economically exposed. I don't know, man. So many bag holders out there on Twitter would not listen to us. We said, listen, this is looking ugly here. The energy side is exposed because it's cyclical.
Yeah.
You don't need to be here.
This isn't a buy the dip situation, right? This is a unique situation. It has nothing to do with growth, has nothing to do with stocks. It's a pandemic, right? It's a different situation.
Yeah, so it's surprise, surprise. What do we get here? We get a price war.
Yep.
And that's going down. So now let's talk about the agenda today, which is no tourism, no bueno.
No economy.
No economy. Yeah, this is crazy. So we got no tourism, no economy. We're going to touch on a few different topics, but let's talk about the ultimate bag holder, Robinhood account holders.
Oh no. Yeah, so this shows you like Robinhood looks fancy versus all the Schwabs and the other guys, the TDs. But all you really need is you need to do your trades and you want it to be free. These other guys do it too. And then so the millennials, they flooded into Robinhood and they're realizing that might have been a mistake. We think guys like Schwab, they're going to pick up new customers.
And so what happened to Robinhood?
Okay, so on the 2 biggest volatility days of this year, that means when the markets are going up and down a lot, you couldn't even get into your account and do any trades. So say you put on a trade, it was up, you couldn't even get out of it. So that's terrible. That's all you need your brokerage to do. And I mean, Robinhood is huge with the millennials. We calculate, so they have 10 million members, 80% are millennials. That's about 20% of all the millennials in the US. So I think these millennials are having second thoughts.
Man, what a mess. Like, this is like, and all of these guys are newbies. Like, basically, they made options like Tinder, right?
Yeah.
They made it so bloody.
Swipe right for options.
Surprise, surprise, you can't. And if there's one thing you should know about options, if you can't get into trade on the days when vol blows out, you're done.
Yeah, if you buy stocks, you can sit around, you can forget about your stocks. You'll generally be okay. Longer you wait, the better you are. Options, you gotta be watching them like a hawk. We've learned that ourselves. So if you get locked out of your account, that's it.
So that may be one dead unicorn. Now onto this whole how tourism affects the economy. Now this is a big thing. Like, so this is why no matter Trump getting on TV, saying whatever he wants to do, any sort of initiative,
yeah, whatever stimulus he's throwing at everyone, it doesn't matter at the end of the day as long as people are self-quarantining and not going out and tourism's down the tubes.
Oh, totally. And this comes back to that graph that's very, very important. Maybe I'll just throw that graph up. Everyone needs to understand distancing. This idea of social distancing is a very real thing. It's taking the spike away from the graph, overwhelming the healthcare system, to flattening out that graph. And this is what is the guiding principle of how Grizzle is thinking about this, because this is what's going to drive things.
Yeah, this is how medical professionals think about it, and this is what they're going to be recommending that the government institute quarantines to basically stop the spread and have the virus start dying out sooner than later. It saves the whole economy. So this is what they're going to want to do. So
tourism is going to take the big hit. There's no doubt about that. No one's going anywhere. So, like, Scott, do you want to go through how important is tourism as a part of the global economy?
Yeah, so we have this really good chart. We'll show you some snippets about it. It shows tourism as a percentage of GDP. So for some places, you have good food, you have sun and sand. Tourism plays a big part. Spain's the highest. We have France, Mexico, Italy.
So Spain's at 11%.
Tourism,
yeah, that's crazy.
That's big. But even say the U.S., all right? U.S. is down at around 3%. It might not seem like much, but we're talking about GDP growth here, not overall GDP. So say tourism falls 50% in the U.S., that takes 1.5% off GDP growth. So we were going to grow at 3% this year. Right then you're at 1.5, and there's knock-on effects, right? It's not just, this doesn't all just bounce back. Tourism workers get fired, so it actually can move the needle quite a bit.
And this is really the whether there's any whether people are putting probabilities on a technical recession. This is pointing to a technical recession.
Yeah, just tourism alone. You don't need other knock-on effects. You just have tourism fall off a cliff. you're in trouble. I mean, Italy, they're on full lockdown
Yeah,
now,
so they went from a third lockdown to full lockdown. I retweeted a tweet saying, this girl from Northern Italy, she's like, yeah, you know what, the biggest problem everyone's saying, it's just the flu. Like that was the wrong strategy. So this whole idea of don't ask, don't test, and which is what's happening in America.
Yeah. But I mean, just going back to Italy as an example, in tourism, Italy was already only going to grow like 0.2% this year, basically not growing.
No.
But if they have tourism fall even 50% this year, they're going to GDP is going to be down 2%. That's a huge swing. That's a recession right there. So it doesn't take very much on the tourism front to really move the needle from we have a growing global economy to we have a contracting global economy.
Yeah. There's some good news here for Canadians. We don't really register on the tourist chart. it's 1.8%. We're right at the bottom of the OECD list. So if that's some sort of participation ribbon, we got it.
You still got the housing market is ripping, so maybe we can make up for it.
Oh man! All right, so Scott, you've been following this like a hawk. You're like you moved from professor to doctor. You're tracking the virus, man. Giving Sanjay Gupta a run for his money, man.
Yeah, I'm trying.
But he's a markets version of Dr. Gupta. So talk to us through this graph, tracking the virus.
Yeah, so we put out an article now. We're going to be updating this every day at 5 p.m. So I would recommend bookmark this. This is what we're tracking. This is what big investors are tracking to see if the spread is accelerating or if it's dying off on a global basis. So the metric you want to look at is you want to see on a daily basis, are new infections growing more than the number of people that are recovering or have died? If yes, that means the spread is increasing. We're going to have to deal with more and more quarantines, worse GDP growth. If the reverse, you see negative numbers in this chart, that's a good thing. That's why we have all the green there. You want the virus generally dying out. So we're going to be updating this in real time every day. And you can see once you see that this is consistently going negative, other big investors are looking at this too. They might start dipping their toes back in the market waters. You could see a rebound starting.
Yeah, this is phenomenal. And I recommend everyone check this out daily. We're gonna be tracking other bits and bobs as we see important information. That page will have all the critical pieces. I recommend everyone read Chris Wood's piece this week. It was phenomenal.
Yeah, that was a good one.
He's as close to any global economist in terms of what's happening in Asia, specifically China. And
I mean, he's based out of there, right?
Well, he's based out of Hong Kong now.
Yeah.
He's in Europe now. But the key thing here, and he makes a really good philosophical point here. So everyone can question China's data, but no one can question China's response. What they did in terms of firewalling the area that was infected was unprecedented.
Yeah.
And what some would say inhumane, but irrespective, if your main goal is to firewall this virus, they did it. And you can only really do that in a command and control economy.
Yeah, it stopped the spread quickly. I mean, within a month, the only way you're going to do that is to take draconian measures like that. And they did, whether people liked it or not.
100%. And so the real question is, in the U.S., can you, there's a level here in a democratic society, Italy being, the most laissez-faire, right?
Yeah.
But in the U.S., you're not going to see that level of containment that we saw in China.
Yeah, or it would have to get very bad for them to even go there. It's just a much longer process to convince the American people to kind of deal with it.
What would it be like if there was a checkpoint outside of Arkansas, Texas, saying, "Listen, if you got a fever, you can't leave this state, man."
The guys would be with their gun racks, giving looks to the police, so it wouldn't go over as well.
Yeah,
it'd be a tougher proposition.
So
gotta love America,
though. Oh, for sure. So that that is so that Chris is on top of this. This is the reason why Grizzle is on top, because we got the world's #1 economist strategist in Chris Wood. Keep up to date on his stuff. Sign up for it weekly. It's there. Now, the one thing that was interesting here was this whole okay, economy sucks, but I want to get paid a dividend.
Yeah.
Exxon, what's Exxon's dividend?
So as of yesterday, I think it was at 8%. Pretty juicy.
Sounds
pretty juicy.
Have they ever cut that dividend?
No, it's only gone up. But everything has its breaking point. So, I mean, on that note, we thought we'd look at energy and the dividend, and ExxonMobil's the bellwether for energy dividends. So, I mean, is the dividend at risk? So we went looking, and you can see that over time, their free cash flow, think about they have to reinvest in their wells, right? If they just let the wells die out, all their cash flow goes away. So there's always a level of reinvestment. So that is what is free cash flow in this chart that we have up here.
And so, and remind everyone what free cash flow is.
So it's just
for an oil and gas company.
Yeah, so it's just the cash flow that you get. And then what do you have to spend drilling new wells to keep that production flat so that you can harvest that cash flow?
Yeah.
And so you look at the free cash flow, that's what they have to pay out as a dividend or a buyback, whatever they want. And then you have dividends growing over time. You see in the past, the free cash flow was way above the dividend. Now we've had lower oil prices for longer. They made some disastrous acquisitions in gas space.
Yep.
Now they're struggling to afford that dividend. What does that mean? It doesn't mean they're going to cut it. We'll say that right now, you're going to get your dividend, but it means they're going to borrow more and more.
Yeah.
And that means a riskier company and their cost of borrowing goes up. So we just
So if I'm supposed to think about it right, you're like, yeah, you'll get your dividend, but now you have a riskier company that probably trades on a lower valuation multiple.
Yeah, so the stock price could definitely go down. You make your 8% of the dividend, stock goes down 8, you're flat. That's like a best case scenario. That's what we've seen in energy.
Yeah,
You
yeah,
have a lot of good dividend yields, but you never get that return because the stock price is falling.
Yeah, and make no mistake, with juicy dividend yields, the play is I'm getting my 8% dividend yield now so that someone a year from now, when they look at the yield of the stock, it's like 4%, right? I'm still getting my 8, but if I ever wanted to sell it, I get this capital gains, where it's been a double or whatever, right? So that's what you're playing for. Now on this next chart,
this is just looking at all the majors. So this is kind of the trend, right? So oil crashed in 2014. They all didn't want to cut their dividend. That's the only selling point these guys have at this point. Like everyone hates oil, so you're just like, oh, I want my juicy dividend. But you see, so they were borrowing a bunch to pay for that when they didn't have the cash flow. Things got a little better. Now we're right back where we started because of shale. Oil prices below 40. So you see the debt to EBITDA, the leverage has gone down. It's going to go right back up again for everyone. So Exxon's not alone here.
No. So it's great stuff. So we'll keep you guys posted. There was the SOS Volume 3, which we talked about. The stay-at-home short basket, which I think will work.
Yeah.
Right? So these were the stocks everyone's like, well, if you're going to stay at home, well, what if there's no economy? That all goes away,
Yeah,
right?
nobody's doing anything. It doesn't work so much.
Anyways, guys, we're going to keep bringing you
Yeah, man.
the SOS series, Coronavirus.